Price imbalance is a very important concept to understand as it can be incredibly powerful. So imbalances occur when either buyers or sellers take control over a particular piece of price action, where essentially it leaves gaps in the market that price will eventually come back to in the future, so we can rebalance price before either continuing or continuing in that direction. So when we look at a bearish imbalance, it means sellers have been mostly dominant in moving price down, and the buyers haven't had a chance to get involved. So the same is true for when we see a bullish imbalance. Buyers take control and the sellers don't get involved in the majority of that move. So imbalances occur on every single time frame. So from the monthly all the way down to even a seconds time frame. You'll see it happen on every time frame. And once you go through your chart just to see how this works, you will start to view the markets differently and realize how price refills these imbalances, sometimes perfectly to a T, before continuing in the other direction. Price imbalance is when we either get a large momentous candle or where wicks are not meeting. So the easiest way for me to show you this is with the example below, where we're going to look at 3 bullish or bearish candles in a row. So if we look at this example here, we have 3 bearish candles in a row. Okay, so it's all selling pressure. Now this would be classified as a balanced bit of price action, because if we look at the wicks, you can see they're meeting. So what does that mean? Well, if we look at the low of this first candle wick, you can see it was down here. We then had price come up and we had this candle coming down, and then the top of the third candle is meeting with the bottom of the first candle. So you can see there's no imbalance that has been left. So prices come down, pull back a little bit, come down again, and then it's pulled back to rebalance and meet the bottom of this wick here with the top of the third wick, as you can see. Now an imbalance would be here. So we have the exact same thing with 3 candles, but you can see how the top of the bottom of the first wick here is not meeting with the top of the third wick. So this whole move from this wick to this wick, this bit of trade in here, this selling pressure is called an imbalance. So you can see where the wicks are not meeting. So that's basically what an imbalance is. And we have the bullish example here. So we have 3 bullish candles in a row. This is a balanced bit of price action because the top of the first wick is meeting with the bottom of the third wick. So it's balanced. And another word for it is efficient. So it's efficient price action. This is inefficient. This is efficient. Now an imbalance, you can see the same thing. We have a gap from the top of the first wick to the bottom of the third wick. So this is the imbalance in here. Now what I'm going to do is go through Euro USD. Let's go on to that now. And I'm just going to go through a month's worth of data on the hourly time frame, and you can see some examples. So I've drawn out some imbalances and some order blocks. So let's go through it. So zooming right into this bit of price action, you can see we have the 3 candles coming down. Okay, so 1, 2, and 3, a bearish push. If we take the low from the first candle, which is here, and the high, you can see this is an imbalance, and I've put it on. So the line here from this wick to this wick, you can see, let me just get on, there we go. So from here to here, this is an imbalance. Okay, so price is likely to refill that before continuing. But if we also see this push down broke structure, and we have an order block, which would be the last up move refined down to this candle, price tapped in before then continuing. as you can see. We tap in, we rebalance that bit of inefficiency, sorry, and then we continue after tapping into the order block. So this bit of price action here, you can see we low, high, low, high. We're sort of pulling back each time we're making lows. So we can classify this as, efficient price action, because all the wicks are sort of meeting with these pushes down, which would be more seen on a lower time frame. These efficient price action sort of moves. But continuing on, the next bit is here. So we have a breaking structure. We have 3 bearish candles. So if we look at the low of this candle and the high of the third, this would be the imbalance. So you can see we also have an order block, which would be here, because the momentum came in here. So price comes all the way down here, and then we eventually come back up, pull back, we come up again, and we rebalance. So you can see this wick here rebalances that inefficiency perfectly. Now we do fall just short of the order block, but we could refine it down on a 15-minute time frame and get involved in that trade. And yeah, so if we look here, we have a low, lower high. Price then impulsively breaks structure here, and we get 3 bullish candles in a row. But if we look at this candle, so 1, 2, and 3, we take the high of this candle and the low, we can see we have imbalance. Price then pushes up, pulls back, it just taps into that imbalance, but it leaves quite a lot left to refill. We then break structure, we tap into this imbalance before rejecting. We form some liquidity around this area, but then we do eventually tap into it, and you can see the bottom of the imbalance is here. We have an order block. Price come down to tap into the order block to rebalance that inefficiency perfectly before continuing. So this would be a very nice trade that we can get involved with. But if we just move on, after tapping in, we break structure, and you can see from here, so we have 1, 2, 3 again, 3 candles, the high and the low, you can see we're meeting. So this is what we call efficient price action. So as prices come down, now this wick on a lower time frame would obviously be bearish candles. We can classify this as efficient, so price can come up from here. We can move up to new highs as we did. So the next bit is here, the high of this candle to the low, only a little bit of imbalance, but you can see price wick down before continuing to the upside. Next bit is here, so the high and the low, this would be the imbalance. Price comes down with this wick, excuse the drawings, but then ultimately we continue up before pushing down. Now with imbalances, it won't always refill price completely to like 100%. What I've seen from my testing is if we get an imbalance and it comes down to refill it by at least 50%, then that can be enough for price to then continue in that direction that we're looking at. So it won't always refill price all the way. Now another thing is it won't always, if we get say an impulsive move up like this, so this is a good example. So we have this impulsive move up, but you can see price never come back down to rebalance it. Now this just means that it can be used for a later date. They won't always refill straight away, so that's just something to keep in mind. But if we just continue, you can see we push down, we have 3 candles here, a low momentum candle, but we do have an imbalance. Price comes up to mitigate, as I was saying, to at least 50%, then continued, but then we do see some bullish pressure, breaking structure. And this is the imbalance that I was talking about, that, we have a lot of buying pressure here. Price never comes back down to test it. We just continue up. But if we continue, we can see we push up. We have one candle here, which would be a bit of imbalance on a lower time frame. But then this sort of move up, we have imbalance. Price comes down to mitigate most of it. But ultimately, most of this move is efficient. We then impulse up, breaking structure, and we also have this little bit of imbalance that price feels here. We have efficient price action with these wicks, but we do have an order block. So price come down, eventually tapping into that order block. So the last down candle, which is here, we tap in before continuing. And then we have the exact same thing with price here. So we break structure, last down candle refined to this candle here. We push in, respect the order block, and then break structure. Now this move is efficient and it is a bit of low momentum, but it is still, you know, an order block. And you can see we are on this pair, we are clearly bullish. So we're not coming below the higher lows. And, you know, we're respecting these order blocks that are forming. So again, we break structure to the upside. We have the high of this candle to the low, which is an imbalance. Price comes back down to rebalance. We tap into the order block, and you can see we tap in 3 or 4 times. We push off, and then we come back down to mitigate to the 50%, or just you know, around 75% of the order block before continuing. The next imbalance would be from this wick to this wick. So this whole move is just nothing but buy-in, which, you know, we had this push down, which was mitigating this move. So this was just probably a news candle. But yeah, moving on. This is all efficient. You can see how the wicks are, you know, matching. They're meeting with each sort of move. And 3 candles here, wick to wick, you know, it's efficient price action. So moving on, we have here, so if 1, 2, 3, this imbalance, price comes down perfectly, which would be seen, you know, more on a lower time frame. But we come to balance price, we push up, push back down, and then we have an imbalance here. Price comes up, but then ultimately just breaks right through it impulsively. So let's keep an eye on this bit of price for a future movement. So we have an imbalance, and we have a clear imbalance here as well, which you can see price comes down. Okay, so moving on, we break structure. The high and low, price comes down to mitigate, pushes back up, and then we do see price move to the downside. But as we broke structure here, we could take the last up move, refine it down to this candle. Price tapped into an order block. And if you want to say we had an imbalance, we could argue from this low to this high, a little imbalance. Only little, but, you know, we still come up to refill that. We have an imbalance here, so a lot of buying pressure here, comes down, pushes off, and then we fill it all here, and we do reject off of this order block. We wick below, and this wick was ultimately just trying its best to, you know, refill this large move here. And as you can see, we do feel around 50% of it. As I was saying, you know, 50% is a good sort of level where it likes to rebalance before continuing. But if we continue, we can see the next imbalance would be here, from this low to this high. Price doesn't quite come down to refill it all. We do break structure. We have these little imbalances here. We tap into the order block, we reject it, we tap in again, reject it, and then imbalance here. I'm sure you can get the concept of how powerful this is just from looking at this, you know, 1 month of data. So next imbalance is here. We come down, an order block is formed, we respect it, we tap in, we break off, tap in again. We leave this imbalance from this high to this low. price comes down, and again probably due to some news, we wick below the imbalance, tapping into an order block, and then we see some heavy momentum to the upside, and price comes back down. We have a bit of imbalance that was left with these 3 candles, and we have a bit of imbalance here. Price wicked it, and we had an order block that was formed because we broke structure, more seen on a lower time frame. And then we have a lot of sellers coming into the market, so the low of this candle to the high, it's all imbalance, as I'm sure you can see by now. Price comes back up, we fall just short of the order block, but again it can be refined down on a 15-minute time frame where we can get involved in this trade. And I believe this was a trade that I did take. Now with imbalances, what we can do is just use them as extra confluence when looking at a trade. I don't never recommend you trade solely off imbalances, because it's simply not enough to have as a confluence to trade in. So it's better to use it. So if we're looking at this as, you know, our hourly time frame, we're looking at this as a push down, a pullback, and a new low. So this would be our lower high where we can look to get short from. Now what we can do is use the imbalance from here to here as just more of a confluence. So if we was to, you know, push down, come back up and rebalance this move, but fall short of this order block, as you can see we did before we put in a new low, then we can still enter on our lower time frame breaks in structure, because price is now efficient. Even though we just fell short of the order block, price is efficient as we have rebalanced this move. So we can still, you know, take advantage of this trade. Okay, moving on. We put in this new lower low. We have an imbalance from this wick to this wick. We pull back, rebalance, and then continue. We have the exact same thing here. So from this wick to this wick, also from this wick down to here, you can see we rebalance it to the 50% before continuing. Well, we respect the imbalance, we push off, and then ultimately we see some heavy momentum to the upside. But I'm sure you can get the rough idea of how powerful imbalances are. Now what I would want you to do is go onto your chart, just like I've done here. You know, choose a pair. You can use any asset on this that's tradable in the markets. Use anything you want, any time frame, and a bit of homework. Just go through it, maybe, you know, a month data, really dig deep into it like I have. Plot on your imbalances and order blocks and just see how it works, and I'm sure you'll get to start seeing the market differently and how it respects these imbalances. But yeah, I hope this was helpful, and let me know how you get on with your own sort of back testing.